So getting started, just taking a look at Bitcoin. There are three main segments to the strategy, okay? So there is manipulation, and I'll explain each one in detail, right? And then after the manipulation, you see the sponsorship. So this is confirmation that the move that you are seeing was in fact manipulation. And then you see mitigation. Okay, so in this chart on Bitcoin, I will show you exactly how you could have taken advantage of the price action that you are seeing here, using the easy in, easy out strategy and applying these three concepts. So manipulation. Why is the market manipulated? Okay, to put it simply, when you and I want to buy, let's say we want to buy at support, it's quite easy for us to fill our orders here. Due to our position size, there's enough liquidity in the market, on almost every single market, for us to fill our orders. However, larger players, okay, dealing with insane amounts of money, have to follow a slightly different set of rules because there is not enough liquidity to fill their entire position. So just like us, we want our positions filled at the most ideal price. They want their positions filled at the most ideal price. So if they try to fill their position at one, and because of their large size, the price moves before they can fill their entire position, okay, that isn't ideal. So what they do is they generate liquidity, or the market makers generate liquidity for their clients, being the large players, so they can fill their orders. And how do they do that? So they print things like double bottoms, okay, because what do you think sits under these double bottoms? Liquidity, okay? In 99% of textbooks, trading textbooks that you can get online, or trading textbooks that are provided to you by the brokers that you trade on, will tell you things like you should buy double bottoms because it's support. When you buy a double bottom, okay, so let's say you're going long here, where is your stop loss going? Just below the lows. When you place a buy order and then you place your stop loss is actually a sell order. Now, if we think about the fact that the larger players cannot fill their entire order without moving the market, what do they need to do in order to fill their order at the most desirable price? They need people selling in the opposite direction, which is why they will print lows like this, generate liquidity below the lows, and send price below the lows so they can fill their orders efficiently. So let's take this step by step. They print obvious lows to generate liquidity. Now this is obviously in a bullish example if they're trying to fill their long orders. Okay, this is manipulation. They then send price below the lows to generate the liquidity in order to fill their orders. Okay, which is exactly what we're seeing here. Now, once their orders are filled, price rallies up and breaks above this high. Now we'll talk about this high in a second. Okay, so just remember that. Now that price is broken up and they have their initial positions filled, let's go back to the fact that they were actually selling in here to push price below the lows. So if they were selling here to push price below the lows and they were buying, now price is above the point that they were selling, they are now underwater on these positions here. So what do they need to do? They need to push price back into the area that they were selling, where they can then let go of the short orders, okay? And then they can shoot price back up. Now what is that? Mitigation, okay? So let's just go over this again. This is the framework for the entire strategy, okay? So we have manipulation, printing the two lows. Then we have the continuation of the manipulation here. They fill their orders, and then once their orders are filled, they sponsor the move, okay? And that's what we're seeing right here. Now, once the move is sponsored, they need to mitigate the orders that they use to push price below the lows, which is what you see right here. Now, how do we, if we know that this is true, okay, and this is how markets move efficiently, and this is how larger players fill their orders, and this is how market makers make a market, They need to generate enough liquidity for all players to be able to trade. Okay? So how do we come up with a systematic approach to taking advantage of these moves? Because obviously you want to be on the right side of the big players. You want to be trading alongside the people that are running the market. So the easy and easy out strategy uses concepts that I've learned from various different people over the years that allow me to take advantage of the manipulation using this pattern. Okay, so we have the low, we have a lower low right here, then we break above the high that swept the low, and once we do break above, this is a broken base. Okay, and I know some of you have seen this pattern out there before, but what you haven't seen is the concepts that I explain in the strategy and the nuances that actually turn these patterns into a repeatable, proven process. And I mean proven by forward tested live results and back tested results that are also included in the strategy. Okay, so this is called a broken base. So we have the low is then swept, we then break above the high that swept the low. And this is all based around manipulation, sponsorship, mitigation. Here's the manipulation, here's the sponsorship, and then here's the mitigation. Then after we see that mitigation, I then go over exactly how we know that this is in fact a manipulative move. Okay, once we see the mitigation, then we use the patterns and the concepts to take advantage of the next leg up. So now that I've explained the three main segments, okay, although I obviously cannot go into too much detail, I'll be here for hours explaining the nuances. Let's see if we can spot these segments in the Bitcoin market. Okay, so we have equal lows printed here. Now, what sits below these equal lows? Liquidity. Notice the dip underneath the lows. The liquidity has been generated and the orders have been filled, and then we see the break above. Now this break above is key because I'm not trying to promote the idea that under every single low is an opportunity to buy. That's not what I'm trying to say. However, using the broken base, you're able to identify if the move below a low or above a high is manipulative, and if it is in fact being used to generate liquidity and fill orders. So once we break above the obvious support resistance level that broke the low, being this high right here, once we see that break above, that is the confirmation. So we have manipulation, sponsorship, mitigation right here. So remember, liquidity resides below these lows. For price to move below the lows, someone needs to be selling. Now the price is broken above the point that they were selling. The orders that they use to push price below the lows need to be mitigated, as in they need to get rid of the orders because they are underwater. Now, let's see if we can see this exact same pattern play out again. Equal lows, liquidity. We move back below the equal lows. We then break above. Okay, so we have the manipulation down into here, the sponsorship being the move up and confirmation break above here being a broken base, and then the mitigation of the orders right here. Now, do you think that this is just a coincidence that it just happens to play out like this? No. No, it's not. Okay, and I'm not trying to tell you that below every single low is an opportunity to buy. What I'm saying is this strategy allows you to pick up on when the move was in fact manipulative. So you will see this exact same pattern play out time and time again. Just coincidences, eh? Equal lows. There's the manipulation. Then we break above. What comes next? Okay, mitigation. Now, here's where the nuances come into play, right? I won't be buying this level. I won't have limit buy orders sitting here. That's not how you trade the strategy. However, what I'm teaching you today is to be able to pick up on the manipulation, then the sponsorship, and then the mitigation. So if you want some more information, I have a bunch of free YouTube videos that you can go and check out. Okay, and I have a bunch of charts on my Twitter. You can go and reverse engineer. You can message me. I'll be more than happy to help you. I do have my strategy releasing in a few days. So if you do want to dive deeper into this whole, all of these concepts, you can do that. Okay. So if you are interested in the strategy, keep an eye on my Twitter for updates or on Discord. No worries. Thank you all. Bye.